Hey guys, it is June the 2nd and another exciting day in the markets. What I think is really fun is you really are getting some of that dead cat bounce situation happening here. And so if I look at the markets, all of it is green. You've got NASDAQ up 2%, which is really a huge reversal relative to what we've been seeing. When we look at the FinViz visualization, you can kind of see that it's very much so broad-based. Definitely being driven by your largest cap names as far as the magnitude goes. But because you have a lot of this green, the screen green currently, you've really got green all over the place. I would say healthcare keeps getting beaten up, which is a little bit of a strange thing. I think a lot of folks there, you did have some news flow that was related to Novartis potentially getting some approval of their COVID drug. I think they're still didn't look like it was actually post phase 3, which was just approval of their manufacturing plant. And so it's a little bit of an awkward thing for everyone to get clobbered on it, but that kind of is what it is. Today, I'm going to talk very briefly about the economic data, which I think to me is a non-event, but for whatever reason, the market's green. And then I'm going to talk about the oil news, and then we're going to kind of move on to questions very quickly, because I mean, there's just not really a lot of news flow going on. So economic data wise, the jobs numbers are coming in as we would expect them to. They really, even though the new demand for more jobs is affected by anything the Fed chairman's going to go, these people were hired maybe 2 or 3 weeks ago. So the way that it works is that if you're an employer, some of you guys already know this, you call in and tell them how many people were under your employ during that period of time. So you probably hired them a few weeks back and not on the immediate. I mean, there are some jobs where I hire you today, you start tomorrow, but a lot of jobs, that's not how it is. And so this jobs number really just represents the continuous absorption of what's already been happening. I think it's a bit backward looking relative to seeing the job vacancies decline, which is really what we need to see if we're going to have a Fed that's going to calm down on the hawkishness. They want to see that the economy is behaving a certain way. That said, you do have another Fed chairman saying, hey, we're probably going to raise rates. I don't see anything changing that in the near term as an attempt to get inflation under control. Things that could impact that top line number pretty aggressively are the things that we can't use the word transitory anymore, but they are things that are going to potentially decrease the components of inflation that are really the problem: oil, food, and then and semiconductors. Now, semiconductors, you know how I feel about that. I probably have to do a little discussion about just the semis. I'm still working on that a little bit, but food and energy. Food, as I mentioned, for whatever reason, there's all this different talk here and there about whether or not the fertilizer companies are going to do well or not. They're going to do fine. I mean, the pricing of where both nitrogen and phosphate is at is a little bit ridiculous. So even if there was an article, I don't know if I put it in here, there was an article that the price of nitrogen was down by 30% versus May. The price in May was nuts, is really what your issue was. $1,400 versus 1,000, which is where 1,000, 1,100, something like that is where it's pricing in at now. It's still ridiculous relative to historical prices. CF is going to be just fine, whether they charge 1,100 or 1,400. We're really talking about prices that used to be around like 600, you know what I'm saying? 700. So it's like kind of a non-issue. It's just how profitable these are, still trading at single digits. So like the price would have to come down a lot more than just 30% in order for you to start thinking, oh, CF's not going to do well in the quarter. It's going to do great. Still, as you know, I'm a little bit more bullish. The phosphates, they didn't come up quite as much, but in fairness, they still came up a lot. So just wait on days when the screen is red and buy them, because between now and when these companies report and when Mother Nature starts to do her thing, that's when we'll know exactly what's going on as relates to pricing on these things. The second thing I wanted to mention, this one started the day off in the red, even though we are clearly very much so in the green. The Fed says it'll start unwinding its corporate bonds. And I saw a bunch of crazy on this. A bunch of crazy is the way to say it. This is what the article says they have in bonds: 13 billion in corporate bonds, okay, not mortgage backs, which is probably the major way that they impacted the curve, but like and other regular government bonds that they're accustomed to holding, but 13 billion in corporate bonds is what we're talking about, at 5 billion in bond ETFs. The 5 billion in bond ETFs, I'm sure they can unwind that. Their timing to unwind is through the end of the year. So we're talking about 6 months to unwind it as slow as you want, right? The 5 billion, I don't think is enough to cause anyone any kind of meaningful grief. The 13 billion would be about the size of I want to say a smaller mid-size hedge fund, something like that, but certainly not a sovereign wealth fund or a gigantic asset manager. Okay. So the 13 billion, nothing to laugh at, but it's not that big of a deal. Especially if our time horizon is 6 months. This is not a distressed seller that must get unwound tomorrow. And additionally, the Fed can always be like, you guys are being jerks. We're not going to sell it too. Do you know what I mean? It can always do that because it's the Fed. It can do whatever it wants. So just realize if you get news on this where people start getting very excited for no reason, this is a big nothing. Okay. In my opinion. And also, yeah, so that was something that kind of was funky. Then this is the OPEC news. Sorry. And as relates to the OPEC news, OPEC raise oil production if Russian output falls under sanctions. And what they actually agreed to do, and I think this is why at first the market was a little bit red, the names got a little bit hit. Thank God I got out of my XLE hedge for the OPEC meeting. Somehow I managed to make money on it. Anyways, it said OPEC will increase production by 648,000 barrels per day in both July and August. Okay, here's the thing is a lot of people are like, well, they've been cutting this entire time. This is terrible. And then some people are like, well, like, how is it compared to the slowing that they had in April 2020? I just kind of want to show you what their production used to be like, so you can kind of get a sense for it. This was the 2019 or 2020 production, oil producers in shale. And between Saudi Arabia, UAE, and Kuwait and Iraq, in 2019, when these were taken, we're talking about 20 to 21 million barrels a day, and they're going to raise in those 2 months 648. So that's like 5% increase, which seems like a lot until you realize that we are still in desperation, dire straits, if you will, and that's despite an attempt for the U.S. alone to increase by 10%. So all these guys are about the same production as the United States of America, 18 million barrels during 2019. We're going to try to do about 10. They're only going to do about 5, and specifically in those 2 months. So it's kind of like, just a reminder, the map of OPEC is also a map of the countries that hate us. So, I mean, they don't necessarily hate all of Europe. So in fairness, I kind of get it, but it's not, this isn't, I don't think that that's what it comes down to. Like, I'm not going to just talk smack as if this is a petty situation. All of the US oil companies were very clear in the second quarter that OPEC was already running mid to high 90% of capacity, so that it would be quite the feat to try to bring capacity on in any kind of more meaningful or aggressive way. The fact that they're going to raise it by 5% kind of speaks to the fact that these companies weren't lying when they were talking about the situation within oil and gas. And I think that more than anything, we talked about the fact that it is to their benefit for the oil price to be high, but there's high, and then there's like, look, we're really trying to get this online. Okay. It's not as straightforward as just like, let's just call Amazon and order up more oil. So just realize that that's what's going on. Again, we're going to get a lot of volatility here because there isn't a ton of news flow, and you do start with vacation schedules, school schedules, things of that nature. But for me right now, I think the market just wants to buy, and if it wants to buy, probably the best thing to watch out for if it gets really cheap is the VIX. So the VIX, not this one, that's the ultra VIX, but this is at 24. It's still a little bit, 25 is really where I would say should be approximately, like 25 should be on the low side, but I think if this thing starts to try to kiss 20 again, I'll probably come in, just because I think we've got a couple of days of people just absorbing the first week of the summer, that sort of thing. And with that, I will go ahead. So I'm looking for this as it gets closer to 22. I will probably purchase it through the UVXY. And the UVXY, I tend to get it around 12.11, something like that, for whatever crazy can happen this summer. And by the way, just to give you a sense for what constitutes crazy in the summer, you could have a massive heat wave that'll take oil prices straight to the moon and it'll freak everyone out. You could have some of the small cap companies saying some dumb stuff, like a smaller mid cap company that has to roll debt and has some issues doing it. You could have any number of random things happening in Europe with the powder keg like situation that we've got. You could have something crazy with China happening. You could have like any number, you could have a hurricane. All the hurricanes are really later summer. You could have a really bad crop report come out after the end of June. There's just so much that can take this market down. And then we also still have to wait for GDP numbers to come out. If remember, everybody is waiting for as much as people love to use the R word recession, it's not a recession until we get 2 quarters of GDP down, negative GDP. We've only had one thus far, so we got to wait to hear it, so to speak. All right, with that, I'm going to stop the share and let's take some questions if there are any. How are you thinking about things?
Hey, May, real short. This is a technical point in the VIX. So yeah, it would be it'd be wise to just start protecting some.
Oh, you feel like if you're going to buy, like just buy a little today and just take an L on it if it continues to go downwards. Yeah. Okay. That's a good point.
It's a hedge because if
I agree.
Your stocks are going up.
Cool. Thanks. It's really interesting because I definitely have some sector bias going on. So I'm a little hesitant to just short the market outright. Do you know what I mean? Because in fairness, I definitely have some sector tilts. You know what I mean? I've just been like and this happens, I've been so bullish energy and fertilizer, then you can imagine that those things have in some cases doubled. So it's not like, it doesn't take a rocket scientist, even if I've paired off some of my gains, to know what my sector tilts are as far as that goes.
Yeah. Same with energy. It hits some technical points that it should sell off.
That's why I was like the XLY might be a thing. But it seems like it just wants, the OPEC news is actually quite bullish for it, as you can see. Do you know what I mean? Because and let me go back to this just in case I did this in a way that wasn't clear. Here's the thing, and I don't know if the market's going to decide to talk about it today or it's going to talk about it. So the increase is about 600,000 barrels a day, right? Russia used to make and produce for the consumption of other countries 10.5 million, right? So basically it's really not enough to compensate if the idea is Europe is going to get off of oil at the end of the year. And there's only 2 ways to look at it. Either the issue is that, here, let me go with the list of countries so you can kind of see it. Either the issue is what every other company said, and so the companies are not lying. You cannot increase production that quickly in the Middle East. Or alternatively, the Middle East is being some kind of fuddy-duddy and refusing to increase production by the end of the year in any kind of more meaningful way to compensate for the 10 million. Now, we have all said here more than once that the Russian oil is just making its way to countries that don't have issues or are staying out of the fight, such as India, Brazil, et cetera. Don't want to call them out and hard to confirm, but that's my best guess of the 2 places that the oil is going to. So there are things to kind of note there. It's kind of ironic because it turns out we've turned India has become like a major trading partner. We finally usurped China for the first time in imports and exports. So there is an irony if it actually is India that's buying the Russian oil, but politics is not my game. Markets is my game. You know what I mean? So something to take note of.
Okay, cool.
Thank you for that. I will take a look at hedging. Sorry, I went way into massive digression there. Thank you for the heads up. I appreciate it. All right, we'll end it there. Have a great day. Bye-bye. Take care. Bye.